Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today I think that we need to talk on the Great British Pound. Situation on the Great British Pound right now is not really very bright as in other currencies. For example, on the dollar index we have some clear setups on the last week. On the euro currency the same, so in intraday charts we've got the patterns that we have discussed. But on the Great British Pound we do not have all this stuff. That's why I have chosen this currency, because maybe in first glance it's not as interesting as some other currencies, but right now it's an important moment to talk about it, because somebody of you maybe will be interested with the Great British Pound, and it's very difficult will be to make the decision on the trading here, because recent price action was a bit skewed by the external driving factor that we have in the parliament. So you know probably that in Great Britain recent and last week was the active discussion of the Brexit procedure, and it has been approved within the 2 years to exit to abandon the European Union. It also was accompanied by a lot of different speeches of the political persons, so it has made impact on the price action. And the overall situation right now from the technical point of view for trading, it's a bit tricky, because we know that situation in the economy of the United Kingdom is far from the ideal, and it looks right now really weak. At the same time, on the horizon, investors were expecting the possible rate increase from the Bank of England in November. So that was actually the major reason of this rally that we saw previously. And what to do with this expectation right now? On the charts, we have a bit contradictive patterns on the high time frames, on the lower time frames, and it's really difficult to combine all this stuff together and make the final decision on what to expect on the Great British Pound. So if we will take a look on the daily chart, at first glance it seems that it's more probable that we should get some kind of the ABC reaction down, some deeper action, by some reasons. First of all, this drop, those of you who are watching for our weekly research, probably you should remember that in the last week of September we also have talked about the Great British Pound, and in fact here we said that market should drop, because market has completed major ABCD action. Market has reached weekly overbought at the FIP level on the weekly chart. And that was really very strong driving factor that has led us to suggest that indeed market should drop here. And this has happened. At the same time, retracement is not really very significant, so just straight retracement. So when the market stands at the overbought on the weekly chart, retracement usually should be deeper. But this is only the half of the problem. The second half is that actually from this action, from the A point to D point, is the bullish reversal swing on the weekly chart. And usually when the market forms bullish reversal swing, retracement also should be deeper. Taking into consideration with the overall bearish, moderate bearish background of the fundamental news in the United Kingdom economy, it's very difficult to expect some really upward action here. That's moving above this top and continuation of the bullish trend. Besides, as you know, as I said, on the dollar index, on the euro currency, also right now starts the preparation for strength of the dollar. And on the dollar index, we're watching for daily reverse hand shoulders pattern. That's just some appreciation of the United States dollar. On the euro currency, we're watching for opposite patterns. It means that overall all this stuff mostly looks bearish for a Great British Pound as well, and suggests mostly some another leg down because in the daily chart, it mostly looks like the reaction on the daily average sold right at the confidence support. So as this reaction has been completed, this market probably should make another leg down. And here is also, as you can see, it's not really superb action. It's not really very fast. Market has stopped right at the monthly pivot point, no upward continuation. So this is not never bad here. So here's picture looks mostly bearish. But if we'll take a look at the weekly chart, guys, I will show you. Here, by the way, you can see reversal swing, so market has exceeded this most recent swing down. On a reversal swing, on the weekly chart, guys, you can see market has completed harmonic retracement. Here it's slightly a little greater, here is slightly a little smaller, but in general the same depth of the retracement has been completed. But what is more important, guys, we'll take a look at the weekly chart, you will see that we have the bullish grabber here. Yes, it's a bit artificial for the market because the appearing of the grabber mostly was due political events in Great Britain, but never mind, this is bullish grabber, and this pattern suggests the taking out of this stop. That is the major problem here on the Great British Pound. So what pattern to follow? So either searching for a long position based on this grabber and attempting of the moving higher, or don't rely on this grabber and searching for the bearish patterns because overall situation looks bearish on Great British Pound and chance exists to move down on this currency as well. So that's a major problem here. If we'll take a look on the intraday charts, guys, here we have this picture. Here, guys, was actually a very good bread and butter sell trade. So we'll take a look at the daily chart. This thrust down, retracement up. Here was the 3-8 resistance, as you can see, this level. The market has shown nicely bread and butter. Okay, on the way up, market has broken this trend line, retested it with this bread and butter, and continue move higher. So you can see that the CD leg looks a bit faster than AB, and market on the way up has broken already confidence resistance. This is some signs of strength. It means that on the intraday charts, we should watch for AB equals CD action. So market probably will move slightly higher. And the major level that we should keep an eye on here is the area between the ABCD target. And here we have weekly pivot resistance 1 and major fib level 134.15 area. So that will be an area that we should keep an eye on. So if you have the bearish view on the Great British Pound, I think that you could keep an eye on this pattern that calls us the Gartley's triple 2 sell pattern. So this is action down and ABCD retracement. My opinion that there should be some compromise in action. I think that it is relatively safe to take as long position here as short. So let's start from the short position first. As soon as market will complete this Gartley's triple 2 sell, market will be at a resistance, and resistance will be rather strong. If you will take the short position here based on this pattern, it's very high probability that at least minor reaction here will happen. And that should let you to move your stop to the break-even. Break-even stops, guys, in the coming week on the Great British Pound will be the major tool that you have to use. Because as you can see, the situation is really contradictory. So here we have bearish view. At the same time, we have the bullish pattern. So it's a bit confusing situation. That's why you should be extra careful or waiting for the clarity. But if you still would like to trade, use clearer patterns. One of them is the Gartley's triple 2 sell that we are talking about right now. So if you will take position here, when the market will show minor reaction here, move your stop to the break-even, because you do not know what will happen, how market will respond to the existent bullish grabber on the weekly chart. Maybe market will show just minor retracement and then turn up. It's also possible. Just use break-even stops. That's the chance for those of you who would like to take the short position. If you have the bullish view and you would like to take the position based on the grabber, the major point that you should control is these lows. If market will drop and will erase this upward action and drop below these lows, do not take long position. It will mean that grabber has failed, and market most probably will start to form this ABC top D pattern right at 26.50 approximately, somewhere in this area. So ABCD pattern will be formed. At the same time, if you have the bullish view, you do not you do not want to take the long position right here because it's under resistance and it's better to wait for some pullback. So use the fib levels from this most recent swing up. Use the fib supports. Watch for some retracement down, maybe to the weekly pivot point. This market could retrace here. In this case, your entry will be at some retracement. When the bears will trade it short, you will be watching just where to go long. So, and stop initial should be somewhere below these lows. So it's a bit more difficult situation for the bulls because stops will be far, but at the same time you have the weekly pattern. That's approximately what you could do. And the same for bulls. For example, if market will start move down and will meet some fib level or confidence support, could be formed here, you have taken the position, market starts move up also. Move your stop to the break even. Because market could show just minor response to the support and then continue move down. So your major task here is to use break-even stops on the common VIG and the British pound. But both scenarios, as for the bulls, as for the bears, are valid, and currently it's very difficult to predict which one will prevail here. That's why, and at the same time, each scenario probably will show some minor action in a direction of the scenario. That will be advantage for us because we will be able to move stops to the break-even and use this. Yes, as you can see, on Great British Pound, it's a bit sophisticated, it's a bit blur, but we have what we have. So that's your choice whether to trade it or not.